What's good, y'all? Welcome to Behind the Earnings. Today we're going to be talking about Constellation Brands. So Constellation Brands released earnings yesterday, and the stock is up 7% in trading on Thursday, on pace for its largest percentage increase since 2020. Constellation Brands is one of the most premier alcohol brands in the world, by the way, so they own some of your favorite brands you've ever seen, like all of these. When looking at their expectations, analysts expected $2.16 billion in net sales and $2.64 diluted earnings per share. They beat both those estimates, with net sales declining only 10% year over year to $2.22 billion and diluted earnings per share equaling $2.88 per share, only down 15% year over year. This is better than the previous quarter, so this qualifies as a beat in their earnings essentially. So that's why the stock increased. They beat what they thought was going to happen. Beer sales fell 1% year over year, and wine and spirits fell 51% year over year. This is partly because the company sold some mainstream brands to focus on some of their higher brands that cost more and some of their bigger margin brands. Despite the weaker sales and earnings, results are more hopeful than the previous quarter because last quarter, beer sales slid 7% and wine and spirits declined 65%. So in comparison, this quarter wasn't as bad as last quarter, so that's why there's optimism for the stock. Now, there are some sectoral concerns when it comes to the whole alcohol beer segment. Consumers are drinking less. On average, Gen Z drinks a lot less than millennials, Gen X, the silent generation, everybody else ahead of them. Higher prices, this is due to inflation. There's been a lot of inflationary policy in the US over the last year and a half, as well as the dollar losing over 10% of its value during this past year. There's a lot of increasing health conscious habits. People aren't drinking as much because they don't like the effects that alcohol does to them. And there are a growing number of alternatives. You can list any number of alternatives. Now, there are some concerns for Constellation themselves. There's been less spending in the Hispanic community, which amounts for 50% of their entire base. And this is partly because of some of the immigration policies that are happening and those other sectoral factors that I've already listed. CEO Bill Newland said that by focusing on factors within our control, we are confident that we are positioning the company for long-term success. So essentially, Constellation is focused on defending margins rather than chasing volume with promotions, getting people into the stores. Constellation is also expected to cut annual costs by over $200 million by fiscal year 2028. During his earnings call, he also said that they're lowering their 2026 fiscal guidance and expect net sales to decline 4 to 6% in 2026. Now, they did mention some expansion efforts. They expanded into low alcohol products like hard seltzers and non-alcoholic beverages, but that doesn't really make up for the decrease in the wine and spirits segment of the business. Now, Deutsche Bank analyst Steve Powers wrote that although the 2026 World Cup could potentially bolster sales next summer, other headwinds continue to weigh the group down, and he needs alcohol as an entire sector. Now, the average price target for Constellation Brands right now is $168, which suggests 20% upside from the closed Wednesday price of around $140. So let me know what you think down below. After hearing about the earnings call from Constellation Brands, would you buy the stock? Do you believe in the brand? Do you drink alcohol? What is your opinion on Constellation Brands as a whole?